Dividends, 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 cash flow, passive income, dividend investing, financial freedom. If you don't like cash flow, if you don't like dividend stocks, click off of this video right now. In this video, we're going to discuss some of the best, if not the best, dividend investments available in the market today. Also, these dividend stocks are going to be relevant 5, 10, 15, even 20, 30 years down the road from now.
Yes, double down, double down. I want 1,000.
We're going to compare two famous exchange-traded funds, NOBL versus SPHD. So, without further ado, let's begin. So before we get started in this video, I want to make a quick announcement just for your well-being and for your safety. A longtime subscriber recently showed me a screenshot of a scam email of a scammer pretending to be me using an email address that is only one letter different from my official email address. So just so you know, here's my official email address, here's my official Instagram. I don't have any other Instagram pages and I don't use any other email addresses. So please, if you receive an email from me, watch it word or letter for letter to make sure that it is this exact email address. Also, with that being said, I'm never going to send you emails promoting any sort of cryptocurrency platforms, any sort of initial coin offerings. Also, English is my first language, so if it seems like it's very broken English or the words are mixed around, which this one was, that's very, very, very unlikely that it was sent from me. I do use spell check. I'm not an English major, but just so you know, there is some slime ball out there that's trying to use the trust that I have built with everyone on this platform and use it for his or her own illegal financial gain. So with that being said, just watch out for those emails. Again, here's my official email address, and please block or report any other email address that's not like this. Please report that. So thank you. So NOBL versus SPHD. I love these two ETFs, and a lot of you have asked me about this. Now, this is $3,000. I'll talk about this in a minute, but in this video, we're going to run both of these ETFs head-to-head through my analytics software. We're going to look at total return, we're going to look at volatility, how expensive it is, expense ratio, sector diversification, never want all your eggs in one basket, style blend, and of course, dividend growth. Now, here are the two fact sheets. We have the ProShares S&P 500 Dividend Aristocrats, that is NOBL, commonly referred to as NOBL. And then we have the Invesco SPHD is the ticker, the S&P 500 High Dividend Low Volatility. So, without further ado, let's jump on my computer and let's get at it. And for those of you that are wondering what this $3,000 for is, I'm going to invest this in one of these two ETFs right behind me. Should it be NOBL or should it be SPHD? You let me know. You guys are going to make my buying decision for me this time around. Let me know in the comment section down below in the next 72 hours after watching this video where you think this $3,000 should go. Let's begin. So here we are magically in my computer. Now we're in my analytics software here, and we're going to go ahead and type in ticker NOBL for portfolio A, and instead of percentage, let's just do dollars. It's more fun that way. So let's just say we invest $1,000. No, let's do 3,000. That'll be the amount I'm investing anyways. So 3,000, and then let's do compare to a second portfolio. Portfolio B is going to be the Invesco High Dividend Low Volatility, SPHD. Let's get that in there, and let's do dollars. Let's say we invested 3,000. All right, so now let's generate the analysis, and it's going to run it through the screener here. And let's see. Okay, so first things first, let's go down and let's make sure our hypothetical illustration gives us the most accurate data possible. So we're going to go view and edit all. Earliest in common, let's see. So the latest the oldest we can go back is October 9th of 2013. So let's see, custom. And let's make sure this reflects the most recent trading day, not including today. Where do we at? So the 29th. Okay, so let's go back. What is that? Almost 6 years. So 6 years of investment history. And right off the bat, let's see total return. Okay, so if we would have invested $3,000 October 2013, portfolio A, that's NOBL, B is SPHD, and they've tracked each other really, really close, but it looks like portfolio B has been a winner of about $100. So initial investment 3,000, initial investment 3,000, and final market value 5,700, 1,395, 58.15. So about $100 difference. Now, averaged annualized return 11.91%. This is total return. Average total return is what that means. So this is growth of the stock. This is dividends reinvested. Okay. Average annualized return for SPHD 12.25 over the past essentially 6 years. Now, this is why I love these types of dividend investments, because when people just look at the yield, and I know I've said this a bunch of times, but for newer investors or people new to my channel, when you just look at the yield of these investments and you say, oh, 2%, 3%, that's nothing, that's garbage. Well, look at the long-term total return if you're reinvesting dividends and letting that compound. That's very, very powerful. These numbers beat the S&P 500. So the cumulative return, so the return altogether, not annual, altogether is just over 90% for NOBL and 93, almost 94% for SPHD. And so now let's go ahead and I want to show you guys, let's go back to the overview. Let's take a look at the expense ratios. Cost is something to compare as long as you're comparing apples to apples and you're looking at performance, right? And so average gross expense ratio, basically 1/3 of 1% for NOBL, and this is 5 basis points cheaper at about almost a solid 1/3 of 1% as well. So they're very, very close in price. Five basis points. It's not a huge difference, but it'll make a decent difference or a measurable difference, maybe over 30 or 40 years, so to speak. Mostly all U.S. stock. NOBL has a little bit of foreign stock, but SPHD has 100% U.S. stock, so that's what this says. I love this screener tool. Let's look at the trailing returns. So in the past 3 months, and this is where it's interesting because they seem a lot alike, but they seem to have very different returns. So in the past 3 months from the date of this video, NOBL is up about 3%, whereas SPHD is up just 1/4 of 1%. Over the past year, this is up almost 14, where SPHD is up almost 7, right? And then you look at the 5-year even. NOBL is about 10.74, and the 5-year on SPHD is about just over 10%, okay? Here's a really interesting factor, and I think this is one of the biggest differences between these two dividend ETFs, okay, is the equity style. So what this is, if you're new to this type of chart here, this is an equity style box, and what this shows is the darker the color is, the more concentration you have in that particular type of stock. So large value is really the largest concentration that's inside NOBL, and then large value again for the equity style and SPHD. But here's where they differ. Look at the growth on NOBL. So there's a decent chunk of NOBL's holdings in growth stocks. Now they're still increasing their dividend annually, but nonetheless there's some in growth. Now, they have a little bit in mid, but then we go over to SPHD, 0% in large cap growth, and double the amount essentially, or not essentially, that's exactly, double the amount of mid cap value, which is really interesting. So very different there, which I found to be really, really interesting. Now, 100% developed markets, that's fine. Another thing I like to look at is beta. Where are we at here? Okay, so beta. They're almost the exact same volatility. They're less volatile than the S&P 500. It looks like by about, gosh, 1/10 or 20 basis points, 10 basis points, 20 basis points essentially. This is interesting. We're looking at sector diversification now. So again, here's NOBL on the left, here and then the black portfolio is SPHD. So communication services, 1% or 2% basically. Look at this, 4.6. Where's another big difference? Energy. Look how much energy is in this one, okay? Now, here's where you can say, okay, well, you know, oil crashed in 2014, but SPHD still did pretty well. We look at industrials. NOBL has almost 1/4 of its holdings in industrials, whereas SPHD has about 3.5% essentially, okay? Zero technology here, has a little bit of technology there. Now let's look at, where's another big difference? Basic materials, 10%, 2%, okay? Another big difference. Real estate, look at this. Real estate, 1.7%, so not a lot of real estate. And then we look at SPHD, almost 22% of the entire ETF is invested in real estate. Consumer defensive, big difference there. Healthcare, big difference there. And then utilities. So while these ETFs have similar goals, right? Higher dividends, lower volatility, or company, still they're quite different. And I find that, I mean, fascinating. Now, so now let's take a look at the portfolio x-ray. Now we went over these in the style boxes, but let's take a look. I want to take a look at the top holdings. Here's geographical diversification. Now, okay, here we go. Now, here's what's really interesting. So again, on this side, excuse me, on this side is NOBL, this side is SPHD. Look at the top 10 holdings are completely different. As you can tell, so Kimco, this is a REIT, really famous REIT, Ford, Philip Morris, AT&T. So here's where you can really see, okay, high dividend yield. Ford has a massive dividend yield. AT&T, massive dividend yield. Okay, Altria, massive dividend yield. Southern Co, big utility, massive dividend yield. Although, here's where the interesting concept, I think, for me as an investor plays into this. This does really well. I mean, both these do really well, really in all market cycles. But I'm thinking that NOBL will do better in bear markets and down market cycles like 2008. Whereas here, yeah, you have a lot of high dividend yield, and yeah, they're not bad companies, but you know, look at like Ford Motor, right? How do you think that's going to do in a recession? Okay, so things like that. Now, or Southern Co, utility, fairly stable. Altria, tobacco, fairly stable. Another tobacco, fairly stable. Kimco, as long as they're not over leveraged, they're going to be fairly stable. So things like that, but that's something to think about. Yeah, it's paying a high dividend in a bull market, but you know, what's going to be the impact of another 2008, right? So while both of these are really, really good and they're both neck and neck, over the past 5 or 6 years, SPHD has outperformed it. And so let's go back to the overview here and let's look at the yield. So here's another difference. The 12-month portfolio yield, so the actual income that you can receive from these investments, we have SPHD at just over 4% right now, and NOBL at just over 2%. So that's another interesting difference. So maybe someone that's saying, look, I'm not looking to reinvest dividends, I want income now, maybe they should do more research on SPHD. Someone that might be looking to reinvest in compound dividends might want to do more research on NOBL, because these are companies that even through 2008 increased their dividend, whereas companies in SPHD didn't necessarily increase their dividend. They just pay a high dividend yield at this point in time. So that's kind of a big difference there. Both are excellent ETFs, and full disclosure, I actually own both of them, but I will be putting that $3,000 to work. So which one? You let me know in the comment section down below. Should it be NOBL or should I put $3,000 in SPHD? Also, for newer investors, if you're looking to invest and further your research of NOBL or SPHD or really any other investment, and you're looking at platforms, of course, continue to do your research, but don't forget to look at M1 Finance. M1 Finance charges 0 commissions, so more of your money goes directly into your investments. These two investments can be purchased on M1 Finance for 0 commission. If you're looking to get started and you decide that M1 Finance is right for you, click the link below in the description and you'll get a cash bonus for using that link. Thank you so much for watching, and we'll see you guys next video.